Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time. Back with my good friend, Mr. Greg Dickerson. How you doing, sir?
I'm doing good. Monday strong.
There you go. Hey, you are my builder, right? Of my seven or eight experts that I'm lucky enough to speak with each week, you are the builder. So what I want to do, if you don't mind, is I want to paint a vision of what I think's going on in China with their second largest property developer, Evergrande. And then I'm going to ask you, what as a builder's options when this happens? Is that cool?
Yeah.
Awesome. So what I see going on over there is over the last couple of years, they've been hamstrung by the central government. Basically, they've capped their borrowing capabilities, which hurts, right? They're 300 billion in US dollars in debt. Then what they seem to be having is a slowdown in property sales, which is hurting their cash flow. Then they go and they have debt coming up. There's two debt payments, interest payments due this Thursday, and they ain't got the cash. So they've been warning about defaults. I'm sure they're looking to probably renegotiate the terms, but at some point, it's a, is it a liquidity problem where they can maybe get bailed out, or is it a structural problem where it's like, whoops, we got over our skis and we got to go. So as my builder, when you're suffering in a cash flow crunch, falling sales, you can't borrow anymore. I mean, do you really even have options, or what's going on?
Absolutely. It depends on how much you owe the bank. If you owe the bank, very little, less than $1 million, you don't have any options. If you owe the bank hundreds of millions to hundreds of billions, you call the shots.
Let's talk about that.
Yeah, well, I mean, they're in a very good position because it's so huge. And Evergrande, I haven't really studied them or looked at them in detail, but they own a lot of stuff. I mean, they own a football team over there, food and beverage, electric car maker. So they're a huge company. They're not just real estate. So this, I'm not sure how big of a percentage of their overall value this represents. They could just spin that whole division off, bankrupt it, and just write it off the books and keep going with everything else.
Interesting.
So from a builder standpoint, when you're facing a situation like that, where you have properties and you're losing equity, losing value, your only options are to work it out with the banks. And the more you owe the banks, the more incentive they have to work it out with you, because they are now systemically at risk, right?
Right.
And all of the other investors. So it really depends on who are their investors, who are the lenders, and what's really going on with the underlying assets and what are they worth. So this becomes a workout situation. This just didn't happen. I mean, this has been going on for I don't know, a year now or something. And the whole China, real estate market's been having a big problem because they overbuilt. And I don't know if you've seen where they're destroying huge condo towers.
I did. I saw that 5 or 6 units that just blew up and it's collapsed in. It was crazy.
Yeah. And for everybody watching, I don't know if you've studied or followed the Chinese real estate market, but you can go and there's reports, that 60 Minutes did, and a bunch of different interviews and documentaries on the real estate market in China, how they just built and built and built. And the Chinese government was taking money and just funding all of these buildings, but they were limiting how much real estate their population could own. They were limiting how many kids you could have. So it's kind of like, what the heck? You're building all this supply, but you're not increasing your population. You're not allowing people to buy property. And then they all of a sudden started letting people have more kids and letting people buy more property. I think you could buy 2 units and use it. But there was, huge cities, vacant, nobody living there, ghost towns of these, incredible buildings. So it's really interesting. And that's, if you remember back when we had a steel problem, we had a drywall problem because China was buying everything up. Cement, I remember, couldn't get cement. They were buying everything and building and building and building. And I have no clue what the heck they thought they were going to do, or how they thought it would work out if you don't let people have children and you don't let people buy property. It just doesn't make any sense. So from the standpoint of what's a builder's choices, you have to work it out with the banks, and it's all going to boil down to how much equity you have at play. What is the value of the underlying assets? Who are the lenders? Who are your investors? And how willing is everybody to work together and create a solution? So you could recapitalize the company. You could take on investment capital. You could sell some assets. You could restructure. So that's what's going on behind closed doors. They're all in there talking. And what's really interesting about this situation is China has made some really bad moves this year that's really scaring investors.
Oh yeah, big time.
They're pushing investors and capital out of the markets. So the likelihood of other countries or investors from other countries stepping in in this situation are pretty slim to
Yeah,
none,
I mean,
because you just don't know what they're going to do.
yeah, I mean, I don't know if you saw it, but this wasn't about Evergrande. I think this was about, I think it was called, anyways, it was a second company. I want to say Soho, but that can't be right because that's a New York neighborhood. Anyways, Blackstone was about to spend, I think it was $3 billion to get a significant percentage of a property developer, and they backed out because of the central government. Again, China has, I mean, it started in tech, then it went to education, then it went to video games, and now it's property, right? Property makes up, I did the research, I think on Saturday, the overall property or real estate market, building, selling, managing, all that sector makes up 27% of the Chinese economy, right?
Yeah, it's huge. And so the process is, they get declared in default. They haven't officially defaulted yet. It's all coming.
Yeah.
So once they actually default, then the process starts. They get notice that they're in default, and here's what you got to do. We want you to pay the loans off, or we want you to bring equity in, or whatever it is. So they work through that. And then you get to a point where you can't resolve it, you don't have the money, whatever. Let's just say that's the case. Then the bank wants the properties back.
Yep.
So then they take it back, you turn it over to them, and then they go and they liquidate the properties, and it's pennies on the dollar. And depending on who the guarantors are, they come after the guarantors for the deficiency.
Yeah.
So that's just kind of how it works. So it'll be really interesting to see how this all plays out. But that's the process in a default situation like this, whether you're a property investor, property developer. That's why I say, you never want to guarantee debt, and you never want to put up equity. That's what wiped people out in 2008-9, people that had all of their equity tied up in properties and they guaranteed the debt. With my situation back then, it was just an equity loss, equity write down for me. So I lost equity, but I didn't have any cash tied up in the properties. I'd pulled it all out through the development process. That's one of the reasons I was a developer. And one of the things I learned how to do was I got paid to build my properties. So I never had any cash out in any of my deals. I always got it back through the process. Right. So, once the financing was in place and I was moving forward, what I lost was net worth, and I lost equity in the properties, but not cash.
Yeah. So it's interesting. So again, Evergrande is probably in a stronger position than I thought they were starting this video. So thank you for that. That's awesome, right? They owe $300 billion, which is the largest debtor, property developer. Yeah. Property developer in the world, right? So they're given your first statement, how much you owe, a little or a lot, they're in a pretty strong position. So that's cool. You're right. They are a massive, massive company, right? They have 400,000 employees. They touch about 3.5 million Chinese citizens somehow, right? 1099s and other things. And you're right. They have lots of divisions. It's very interesting to think about now, right? Because again, they can go back to the banks, delay, postpone, trade this. They could also, to your point, spin off. I think Johnson & Johnson is doing something similar with talcum powder or whatever it was. They got caught or something. So they're just going to create a division and write that division off. So they could do something like that if the other entities are big enough and strong enough. Very creative. What I thought coming into this is, and it's kind of to your point about the Chinese government, frankly, punishing wealth. That's what I think they're doing. They're punishing wealth. I'm guessing they're going to come in and say, all the managers or owners or whatever of this company, you're done, fired, shame on you. You're gone. And I always thought they were going to come in and just say, we'll eat the debt, whatever is not there, but we're going to kind of chunk it up and sell it to other people, right? Evergrande doesn't exist in a month is what I thought coming into this, but I could be wrong.
Well, I don't know. That's what the world's waiting to see. How does China handle this? What does the Chinese central bank do? And what happens to the company ultimately? Does it get taken from them? I mean, it'll be interesting to see what happens. So,
do you remember long-term capital management from the late 80s? So there was long-term capital management in a nutshell, as I remember. They were basically one of the first large hedge. This is Michael Milken, as I remember.
Oh, okay.
Yeah, he was trading in
junk bonds.
Yeah, junk bonds, and had a great run, and then suddenly didn't. They were on the wrong side of a trade. So what basically happened there is the Fed came in, which is in this instance,
well, it was a little more than that because he went to jail. So they were breaking the law. It wasn't just a trade that went bad. Sure. They were actually falsifying the values of these assets and all this. I mean, it was you could go read about it, but it was a scam.
Yeah, no, it definitely got into that for sure. But what I remember from it is, again, we studied it in college, and that's been 30 years, so it's really fuzzy. But basically, what happened is the Fed, the New York Fed specifically, came in and basically got Goldman and J.P. Morgan and all these other entities in a room and said, "All right, we're all going to eat some of this, right? Then you each get these little pieces." And then basically long-term management was gone. It didn't exist anymore. And then he went to jail and all those things. So that's one of the outcomes. That's probably the most likely outcome for me, because what I really don't see happening is a Lehman moment. And reason I say that in China is the one thing the Chinese government, as far as I can tell, don't want is they don't want ordinary citizens rioting. And if suddenly the housing market fell 50%, like we saw in some markets in the Great Recession, that would cause rioting in China, I'm guessing.
Yeah, and this isn't a systemic event for the entire real estate market in China. I mean, they've already created their own problems,
Yeah.
you know, but this one thing here, again, it's just a bunch of stuff that's sitting vacant because they overbuilt and overdeveloped and everybody was giving them money. So
Yeah.
it's not going to take down the entire real estate market in China. Again, I mean, they're $17 trillion GDP. You know,
Yeah.
their real estate is probably, who knows how much all the real estate in China is worth, but I mean, you know, a lot of people think in the panic of, oh my gosh, is this like what happened in the United States with the housing market? No, the housing market was 30 trillion, or
Yeah.
how much is the housing stock worth in this country?
I do
So
not know. Not
yeah,
off the top of my
this
head.
was a huge systemic deal where you had AIG, you know, $1 trillion asset manager that was in trouble. You had multiple banks in the hundreds of billions of dollars that were in trouble.
Yeah.
So this was a huge systemic thing. So that's what everybody's questioning. Wait a minute, is this just one leg of a, you know, house of cards in China that's going to fall? So that's what's really interesting. That's, you know, about this week is what else is lurking behind closed doors in China? Are there other companies like this with the overall real estate market there that have issues, or is this an isolated thing to this one developer? So
Yeah.
that'll be interesting to find out, you know,
Yeah.
how that looks. But, you know, China has so much money, they can do whatever they want in terms of this situation. So it's going to be
Yeah.
really interesting to see what they do. And if they seize assets, if
Yeah.
they do that, that's when you're going to see a collapse of the Chinese markets, you know, which will affect, you know, global
Yeah,
markets,
for sure.
but it's a rotation. You know, money will come out of those stocks. It'll come into the, you know, into our markets. But investors, when they start becoming fearful, they become fearful everywhere.
Yeah. And I think that's what's going on today. I think there's just so much negativity, or there's so much risk, I guess, going on in this week, right? You have that event in China. You've got Congress coming back in session. Are they going to spend another $3.5 to $4.5 trillion? We got a debt ceiling. We got this, we got that. It's just a lot of stuff going on. So I think there's a lot of people going, you know what? I would much rather be in cash. That's what I think is happening today.
Yeah, I'm just looking up while we're talking.
Okay.
Yeah. So, you know, there's articles back in 2020 bubble, China grapples with epic property boom. So, you know, China's real estate values are in the, you know, 50 plus trillion dollar, you know, range. So this is a very small blip on the radar.
Yeah, it's going to be interesting. I think it's really going to boil down to the fact, does China step in and make this long-term capital management, where they basically go to the next 5 largest property developers and say, you eat that, you eat that, you eat that, you eat that. Evergrande is gone. Or does it become a Lehman moment where they say, bad choices, can't help
You're
you,
out.
you're out. And then you get cascading, because the debt market really could lock up in China. And again, if you have so much debt in that market, if they chose the other option, other property developers will be in trouble because their assets on the books will devalue. You know, when that happens, loan covenants break, other people could be in trouble. It could get pretty interesting. So Greg, do me a favor. How can people follow you and get part of your world?
GregDickerson.com, all my information there, YouTube channel, podcast, GregDickerson.com. Go check it out.
Yeah. And do yourself a favor. Really do sign up, follow him on YouTube. Go check out his website. He talks about a lot of stuff that I am not qualified to do, not only a developer, an entrepreneur, all of these things. So he is my go-to guy. So thanks, Greg.
Good to be here.